second quarter for Asian Paints, a dull show amid muted consumer sentiment, price cuts, increased discounts, as well as an exceptional loss coming in. However, the management also expects that the price hikes taken in this particular quarter will be aiding the company in the second half of the year. In fact, we do have Somi standing by with the earnings fine print as well as the brokerage verdict.
Well, if you look at Asian Paints number, that were pretty much a mess on all fronts, be it revenue, EBITDA margins or the net profit. The numbers were pretty much lower compared to what the street was estimating. In fact, if you look at the net profit number, it has missed analyst consensus estimate by nearly 36%, which is the biggest miss that we have seen in case of Asian Paints at least since 2014. Now, on the volume front, it had declined by around 0.5%. The first time since COVID that we have seen a volume decline coming in for Asian Paints. And what is most surprising here is that the peers had actually reported a volume growth, and in front of that, Asian Paints has reported a volume decline. Its peers like Berger, Kansai and Akzo had seen a volume growth of nearly 4% or high single digit compared to last year in the second quarter of HYFY25. When it comes to the EBITDA margin, for the first half of this financial year, margin stood at close to 17.3%. This is way below the company guidance of around 18 to 20 odd percent. So it remains to be seen whether the company revises its margin guidance on the lower side or not on the conference call that will be held today in the evening. Apart from that, if you look at the volume decline is also higher and the revenue fall is also higher when compared to peers, which means that the Asian Paints could have lost some market share in the second quarter of FY25. Now, why such a weak set of numbers? The company has attributed this to weak consumer sentiments, heavy rains and floodings in parts of the country, which also impacted the quarterly consumption for the company. Apart from that, the company is also saying that revenue was affected by the price cuts taken last year and the shift in product mix, which also impacted the margins, and also because of higher discounting that we had seen in the second quarter. On the positive side, the company has taken a price hike in the second quarter and is optimistic that margins could recover in the second half of this financial year. So the conference call will be held today, and the two most important things to track from this would be firstly the management commentary coming in on the demand in the second half. What are the early signs that they're seeing and how much of a benefit that they are confident of realizing on the back of the price hikes that the company has taken in the second quarter.
If you like this video, then like, share and subscribe to ET Now.